Okay, I think we've probably got a decent number here, so we'll get cracking with the webinar. Thank you everyone for joining. It's great to see so many people getting involved in this webinar. Today we've got Simon Treston and Joe Horner from Acumen, part of Q Underwriting. They're going to be presenting on the future of the charity sector, which will be really interesting to hear. Bit about Q Underwriting. Q Underwriting is a specialist commercial MGA consisting of TFP, which is our wheels-based specialist, Thistle, which is our liability specialist, and Acumen, which is charity, faith and recruitment. So this is the third in our webinar series. We've already done construction and truck fleet by Daniel Storr and Mike Hobbs. If you want to listen to those again, let us know and we can get some links sent out. We're going to have some polls throughout this, so please get involved with the polls as we go through the webinar. It's great to have your feedback as we go. And then if you've got any questions, please use the Q&A button at the bottom of the Zoom call and just write in your questions there. And if we have time at the end, we'll go through them with Simon and Joe. So without further ado, I'll hand over to Simon, who's going to run through the presentation with you. Thanks a lot.
Thank you very much, Christian, and good morning, and thank you to all of you for joining. As Christian said, this is our third webinar, so I'm going to be talking today about the future of the charity sector. Just wanted to do a couple of little introductions. So I've actually recognised probably about 2/3 of the people are actually on this call from my time actually working in the charity sector. So those of you I do know, thank you very much for joining. Nice to meet you again. And for those of you who I don't know, it's very nice to actually be introduced to you. My name is Simon Treston. I'm the Charities and Faith Lead for Acumen Underwriting. I've been underwriting charities for about 20 years now. Previously worked at Royalton Alliance and Anzor and Zurich Municipal before joining Acumen Underwriting about 3 years ago. I'm joined here by Joe Horner, who's going to be the Chris Whitty to my Boris Johnson. Joe, I don't know if you actually wanted to just say a couple of words about yourself and your background.
Nice to meet all of you who I haven't met yet.
So Joe's been with us about 5 years, so he's got a good understanding of the charity market, and he's one of our new business underwriting team members. So I wanted to give a little bit about the company. So Acumen Underwriting was started in, in 2005 in partnership with the NCVO and Bells Wells Braithwaite, who are a leading law specialist. We're now part of Q Underwriting, specialising in the charities and not-for-profit sector. We're based in Leatherhead normally. We've got 24 people, 17 of whom are underwriters. We do have a real variance in the levels of experience. We've got a few new starters, and then we've got some of the old timers like myself and Neil, who've got decades of experience under our belt. But we really are charity specialists. We're not general SME underwriters who do this as a bit of a sideline. This is what we do day in, day out. We've got two principal products. We've got our charity combined product and our faith combined products. These are quite broad products. They are specially designed for our markets. We've got some sections that cover in there that are specific for charities and faith markets, and some extensions as well that are designed specifically for our market. So, for instance, we have things like clearance of fly tipping, which was specifically put in to help our village hall customers and playing fields and that sort of things, where they specifically suffer with that sort of loss. In terms of our target markets, I wanted to give you some background of the sort of things we do right. It's charities, not-for-profits and social enterprises of all sizes, really. We don't specifically focus on small or medium-sized ones. We can do some of the larger charities as well. And faith organisations of all denominations and different types of faiths. Where we don't specialise, we don't really have a massive market for sort of government type risk. We do have a few parish councils, but it's not our specialist area. And again, in terms of things like mainstream education, we do have some colleges, some of the smaller faith schools, but it's not really a target market for us. So we're really looking more at the sort of the general charity, not-for-profit and faith markets. So I appreciate that quite a few people actually on this call are not necessarily charity specialist brokers. So I wanted to give you a little bit of background, a little bit of context to the sort of organisations we're talking about. So in the UK, there are around about 200,000 registered charities, about 170,000 in England and Wales. There's about 25,000 in Scotland and about 6,000 to 7,000 in Northern Ireland. they really do vary in size, which we'll talk about in a second. On top of that, we also have about 100,000 or so social enterprises, and about 16,000 community interest companies. So charities certainly make up the vast bulk of those. In terms of the faith sector, you've got about 40,000 places of worship. Christian organisations make up the bulk of those, about 37,000. Islam at about 1,800, and Judaism, Sikh and Hindu making up the main bulks of them. On top of that, you've probably got about another 10,000 or so organisations that don't necessarily have their own place of worship, and they'll rent village halls and so on, and they'll have regular worship services. So it's quite a large sector. As I mentioned, there's about 100,000 social enterprises in the UK. These are a relatively new phenomena. They are effectively profit-making companies that have a social mission written into their goals, names and objectives. Quite often they'll reinvest profits that they make back into the organisation, or they'll donate them to other charitable causes. And they'll be a lot more transparent in terms of how they actually they operate in terms of their social impact. A little bit on the numbers of people. There's about 945,000 trustees operating in the UK, about 900,000 employees. So this is approximately 3% of the overall market. So there's a lot of people actually involved in there in terms of the workforce, and about 19 million people volunteer each year, and 11 million volunteering on a regular basis. So we're talking almost a third of the population actually works for a charity at some point over the course of the year. So that gives you a bit more of a feel in terms of what we're sort of talking about in terms of numbers. As I mentioned earlier on, there is a real schism, I suppose, in the way that charities are actually organised. The bottom 50% of organisations have an income less than £25,000, and their total assets only make up about 825 million out of the 82 billion of total income that are actually there. So the top 0.7% are the real giants. These are the sort of the brand names you probably recognise. These are the guys with incomes in excess of £10 million, and they actually make up about 53 billion of the income out of the 83. So you can see there's a real glut of the income actually heads up to the larger giant charities up at the top. So hopefully that's given you a bit of context. I'm going to go on to our first poll. So Mike's going to send something over. If you please do interact with this, and this gives a bit of a feel for how experienced you guys are in terms of dealing with these sort of clients. Just going to give it a couple more seconds for us people to come on. Thank you. Excellent. So it seems that a good portion of you, so about a third of you, have more than 50 or so charity clients. So that's great. So for the guys who only have small amounts, I'm hoping that we can actually do more business, and this is the idea of the seminar, to sort of give you a bit more confidence when dealing with these sort of clients. So thank you very much for that. So I'd like to move on to the challenges faced by the sector. So this is based on a number of points of research that are done by some of the regulators, some of other organisations, and indeed some of our competitors. Not that I necessarily want to big up the competition, but Ecclesiastical and Municipal do produce risk reports on a fairly regular basis. Oscar and the NCVO produce more. NCVO produce an annual almanac that gives a lot of statistics around charities in the UK, so they're really useful bits of information. It's worth bearing in mind, though, that a lot of the information I'm going to be giving you in a second actually took place before COVID came out. So things have changed a little bit, but COVID really, more than introducing new risks, has just exacerbated these ones that have already been in place. So, and while I've tried to list them as, I suppose, independent subjects, a lot of these are codependent. So a charity that has a damaged reputation will often find themselves struggling in terms of trying to get the funding and getting the people to actually come in. So if we look at our first topic, it's the funding and financial instability. This consistently comes out at the top in terms of short-term and long-term issues as far as charities are concerned. So 84% listed this as their primary concern, with unsustainable running costs being one of the biggest issues. So public donations make up about half charity income. The costs are really starting to outstrip the money that's actually coming in. So whilst growth is actually on its way up, it's stayed fairly static in terms of what they're actually getting from the government. More's coming from local government than central at the moment, but they're finding that now that the costs are actually starting to increase far more than their actual income is. So whether it creates increased risk for charities, and certainly suppose from an insurance perspective, is that people are expensive and they're normally the first thing that actually needs to go. So when they need to make financial savings, people are first out the door. So that increases the injury risk. There's potentially fewer people doing the same sort of jobs, but with less scrutiny. Joe, I think you've got an example of where we've got one of those cases actually ongoing at the moment. Do you want to elaborate on that?
Yeah, thanks, Simon. So, yeah, there's a couple of examples we've had recently, but one kind of more springs to mind. There was a domestic abuse charity in Shelter, say, domestic abuse Shelter X, and it had to close its doors due to a lack of funding. They had to make some pretty key, key staff redundant, and a lot of service users reliant on the shelter and the counselling service they offered for their own kind of physical and mental health, which is already quite strained by the, what's going on with the pandemic, and it left these, already vulnerable people increasingly vulnerable, mainly due to the abruptness with which it had to close after a couple of key people had to be made redundant. And there's quite a large potential there for claims of mismanagement against trustees. If things were managed better, maybe that could have been prevented. And it's something I've seen a couple of examples of recently. So hopefully not something we see more and more of, but it is something we have seen, and that's just one of the examples of that.
Thank you, Joe. Again, I mentioned abuse safeguards. I know certainly when COVID first struck and there was a glut of new volunteers coming into the system, there was a bit of a struggle in terms of getting DBS checks done in time. But absolutely, the abuse safeguards, they can't really be let to slip at all. So that obviously is a big risk step. In terms of the financial lines covers, this is also an area that you might want to actually be looking at as brokers are looking at their trustees' indemnity or directors and officers policies and PI coverage to make sure that if there is any potential slip in terms of numbers and the activities that they're doing, that these are actually going to be picked up. And I'm going to mention again with legal expenses and EPL, there's potentially going to be redundancies. This is the sort of thing that we need to be considering. It's worth mentioning that you want to get those in early. Certainly most legal expenses policies will have a waiting period, normally 180 days from the start of the policy before a claim can actually be made in relation to employment. So if there are going to be redundancies coming on in the future, now's the time to actually start getting legal expenses policies in place. Interesting note on the governance side, fundraising regulator, which is one of the new regulators that came in a few years ago, has been noting that there's an increased number of complaints. Obviously, a lot of charities are now struggling in terms of fundraising, not being able to run events and so on. So they're resorting to more traditional methods of ringing people, letters, street collections and so on. Unfortunately, they're all doing it at the same time. So the complaints are going up with people feeling that there's some degree of harassment actually going on. I'm just going to move on to our next poll actually at this point. So in general, do you believe charity and faith organisations should take out financial lines covers? I have a personal opinion on this, which I will share at the end of the poll. A couple more seconds. Thank you very much. Yes, but most don't take it. That seems quite reasonable. From my point of view, my experience has started off in the charity trustees indemnity section with RSA. And my view is that every single organisation has an exposure in this area, and the costs have come down so much and it's so easy to buy it. I don't understand why organisations don't want to take it. And I think the more that charity trustees realise that they have an exposure just by being a trustee, and it's their personal assets that are at risk, so it's their house and their bank accounts and their wife's jewellery that's potentially at risk. So I generally don't understand why they won't take it, but I guess that's the case that it's actually there. So thank you for taking part in that poll. Let's move on to looking at gaining and retaining talent and engagement with supporters. So a lot of charities for years have struggled to actually find enough trustees, certainly. So about 80% have said they've always had vacancies on their board for at least over a year. They are competing with corporate salaries. So really, unless you're at the top end of organisations with the larger giants, you're really going to find it struggle to actually compete with the corporate salaries. Employee numbers have gone up, so it's about 17%, I believe, over the last decade or so. Volunteer numbers have stayed relatively static, so more people are coming out of the public sector and moving into charities instead. In terms of COVID, I mentioned previously that there was a surge of volunteers as COVID came out, certainly in terms of local communities. Lots of organisations were popping up with little Facebook groups of helping people in the local area. So a lot of new organisations were coming up. The good news is a lot of those were younger people. As a lot of the older regular volunteers were having to shield or self-isolate, a lot of young people stepped in to actually fill a gap. And again, a lot of them decided that it's a very positive experience and they want to continue doing it going forwards. That does have its drawbacks in some ways. So a lot of these new organisations have been set up by people who want to help, but they don't necessarily have the experience of actually running charities. As I'm sure you're aware, there's lots of legislation and regulation that comes around running a charities that you may not necessarily be aware of. So there's a bit of an increased risk there. Also, as these charities got more and more involved and the pressure's mounted up, so apparently there have been more reports of employees suffering burnout, and just as stress levels are increasing. And in terms of the volunteers that are coming in, a lot of them again are newly unemployed people who've got spare times on their hands. So charities are having to toss up whether to expend the necessary capital in actually getting these people trained up, purchasing PPE and so on, knowing full well that they may not necessarily stay as volunteers for that much longer. Where we can help, certainly from the insurance industry, we want to do our bit. From a broker's point of view, it's important to speak to your insurers, speak to the MGAs if they're writing it in our case, and explain the situation. Certainly in our case, where we've had charities setting up new projects to support tackling with COVID, we've been able to waive some of our premiums and ease the conditions to try and make things easier. Inexperienced trustees, again, they're going to benefit from having trustees indemnity or directors and officers insurance, legal expenses, EPL, the usual range of financial lines. It's also worth mentioning that a lot of policies will actually include a range of services. So you've got legal advice helplines, employment advice helplines, but a lot of these will also include counselling services. There may be websites that include sort of well-being type things to really sort of help our policyholders actually manage their own employment-related issues themselves. It just gives an extra edge and just helps look after their employees and employees and volunteers. In terms of actually engagement, charities are now really looking towards where they can actually bring new people in, both from trustees and employees and volunteers, but also for supporters and donors. They're looking at the longevity of the organisation, so bringing in newer, fresher faces and just give them a different perspective as well. In terms of the churches, I've mentioned that church numbers, these are slowly going down. It tends to be the more traditional faith, so it's Catholicism, Church of England, Presbyterian, Methodist. These are the ones that are actually seeing reductions in their attendance numbers. The newer churches, the evangelical and Pentecostal churches and some of the Eastern Orthodox churches are actually seeing their numbers increase. The Orthodoxy ones tend to be more from immigration, but the evangelical and Pentecostal ones, they're really attracting younger people. Their services are a lot more vibrant and involve a lot more engagement with the public rather than necessarily being about ritual and tradition. Again, Joe, I think you mentioned you've got one of your cases that has got a similar issue with this at the moment.
No, it's something I'm seeing increasingly. You know, newly set up church fellowships and churches, quite a lot of which could be evangelical or Pentecostal in denomination, and they're, you know, just in the kind of non-traditional and not what you typically expect buildings and constructions that, you know, that they actually use for their place of worship. I've seen a couple, you know, a fair few recently on kind of industrial estates, which comes with its own set of risks because during business hours they're less habited, there's less kind of oversight from people around there, and they tend to have a slightly larger exposure to, say, you know, some malicious damage or, you know, some break-ins, stuff like that. But you know, places of worship that I'm seeing popping up, just not in more than like in the traditionally, you know, strong denominations.
Sure. I was going to mention about a lot of the organisations, again, certainly churches are now starting to appeal to younger audiences. A lot of them are actually now doing new activities designed specifically to appeal to those younger audiences. So again, from a broker's point of view, you need to make sure that these are actually getting picked up. As obviously there's an ELMPL exposure there, especially around the safeguarding side. Really, a lot of it's just around controlling the risk and make sure the risk management is in place to actually do that properly. Again, things like the DBS checks or and just really making sure those are actually properly controlled. The other issue around the attracting young people, a lot of it's been driven by the use of social media and digital activities. So young people are more keen to this, and they tend to use this a lot more. So this has additional risks around sort of cyber liability, copyright, and that sort of thing. We've got a claim ongoing at the moment with a charity who decided to revamp their website, but they decided to use some images they'd taken off the internet without actually checking the position around royalties. So they currently have a copyright claim going through. There are organisations out there that have an operating model which is based on scouring the internet, looking for people using copyrighted images without the right permissions, and then sending out a legal demand for royalties, whether they actually hold the royalties or not. So there are pitfalls certainly where they're actually setting up new social media. Again, we also need to consider that things like abuse can occur online. It's not necessarily related solely to physical abuse. So grooming can happen online. So it's important that they have all those correct controls in place to ensure that the safeguarding measures are still adequate. And again, some of them are actually reaching out to audiences they would not traditionally go for. So certainly looking at some of the minority communities with the disabled as well. There are a couple of pitfalls there. I mean, I was looking at an interesting example with a charity that decided it was going to market to Muslim men to try and encourage them to make wills in the hope that they would actually leave a legacy to the charity involved. Unfortunately, they weren't fully aware that in Sharia law, this is generally not done to write a will. It's normally the family will actually carry out the wishes of the deceased based on their understanding of what their wishes would be. And in some ways, writing a will is almost stating that you don't really trust your family members to look after your wishes. So that kind of backfired on them. So they just need to be a little bit careful about not stereotyping or homogenizing groups and potentially causing offence or accused of being patronising and so on. Again, from the coverage considerations, we're looking at DNO and TI, potentially with PI and PI extensions if they're going to be doing a lot of social media activity, potentially cyber, possibly depending on the actual size of the organisation, what they're actually doing. So I want to talk a little bit about the data protection and cybersecurity. GDPR came in a couple of years ago, and I think it really surprised the charity market. A lot of them found that they weren't prepared. I know a lot of the surveys at the time, with coming up to at least a couple of months before the law came into effect, they still weren't prepared for it. Most of them did actually get on the ball, and they changed their processes and procedures to actually make sure that they were securing data properly. So the key to that is really all around having not only the technological solution, so the firewalls and antivirus program, but just having the training and awareness of the staff to make sure what they can and can't share. Insurance is obviously there as a safeguard, so you'll probably find that your PL policies will have extensions for data protection. There's probably something in legal expenses as well, and TI and PI can sort of pick up the other areas. The other area is cybersecurity. So I mentioned that 22% of charities were hit by cyber attacks, more so on the larger ones. Charities aren't necessarily targeted, but they do fall foul of it, and they tend to suffer more similar because they quite often will be using, I suppose, freeware versions of software that won't necessarily be as robust as the paid versions. Staff tend to be older and less sort of IT savvy, so they are almost in a way bigger targets than commercial organisations. So this is where having something like cyber security or cyber recovery policy in place would be really useful. So it's about £10,000 is the average cost of rectifying a breach. And if you bear in mind that I think it's about 40% of charities in the UK have a total annual income of £10,000. So the vast majority wouldn't be able to actually do anything with a cyber ransom effect or a data breach. And as well as the actual costs, you've got the amount of time taken involved in putting your data back, contacting regulators, contacting affected data subjects. It's a big effort. So really we need to be looking at getting cyber more into the minds of charities, even if it's a low-level cyber recovery policy rather than a full-blown, high excess, high-cost, full cyber policy. So another quick poll, looking at the cyber insurance preference. What would your advice be to charity and faith clients regarding cyber insurance? A couple more seconds for this. fabulous. It's a fairly well overwhelming response to the recovery, breach responses, and comprehensive cyber liability. Let's see. I mean, the difficulty with cyber policies is sometimes the cost, because I think they originally were designed for much larger organisations. I know we have had one of our policyholders where their total combined policy was about £10,000, and they asked for a quote for full cyber, and the full cyber came out at £13,000. So it's more expensive just for that one part than it was for the rest of their insurances put together. Certainly, as a minimum, basic cyber recovery sections and policies can start from £70, £80. So the smaller organisations really would benefit from having something like that. But thank you again. Want to look at reputation trust. As I'm sure you're aware, certainly for those people who have been more involved in charities themselves, but there's been a lot of public scrutiny around charities, ranging from the ongoing inquiry into sexual abuse, exploitation of overseas workers, charity CEOs having exorbitant salaries and so on. So there's a whole range of issues that have really sort of focused the public's mind in terms of how charities operate and getting their transparency over. Fundraising regulators come in to add additional scrutiny onto it. But it's all really important because the reputation of a charity is sacrosanct, really. So all their funding, getting the people in, really does depend on how well perceived they are by the public and donors. So increasingly, you'll find now, I think, in policies that there will be sections for PR services where there's actually been a loss. So if they have someone fall off a climbing wall, that allows a public services company to come in and start making some press statements and just clarifying that everything has now been fixed and it was a very tragic incident and so on, just to actually get the organisation back on its feet and restore its reputation again. Controlling the claim is also important. So whilst we need to maintain transparency, we certainly don't want to be trying to sweep things under the carpet. Having a good claims service from the insurance companies going to help you actually control that. If you can settle things very quickly, it's just going to make sure it doesn't actually appear to be a bigger issue than it actually is in reality. So the advice from the brokers, from you guys, is going to be absolutely invaluable in helping them actually get that together. If there are available services, or a property damage loss recovery service where they can get a loss assessor who will work on behalf of the policyholder, getting those in to get those sort of claims back and down as quickly as possible is going to be really useful in terms of actually controlling the message that goes out to the public. There are a number of areas where we can actually assist in that. So fidelity guarantee policies. If there's a fraud, it just helps the company operate and makes it sort of more apparent that they are in actual control of how their finances are working. Again, things like legal expenses and EPL cover if there are issues relating to employment practices, and again, cyber for where charities get hit by data breaches. Data breaches can be particularly problematic because people don't want to hand over credit card details to charities and for them to take a donation if they know that they've been hit by data attacks in the past. So getting that claim sorted out and getting the reputation back on its feet as quickly as possible is really important. I want to touch a little bit on political uncertainty and the dreaded Brexit, unfortunately. In terms of Brexit, it's really anybody's guess at this moment in time exactly how this is actually going to look. Principal concerns that seem to be coming out from the third sector and indeed the general public seem to be these sort of ones I'm listing here, around sort of right to work for volunteers overseas and reciprocal arrangements for EU volunteers in the UK, disruption to supply chains. Devolution is obviously becoming a question mark, certainly with the Northern Ireland issue, and just a general increase in potential poverty and fundamental human rights, with us losing the Human Rights Act. Another concern for charities certainly is the merger of DFID, which is Department for International Development, and the Foreign and Commonwealth Office. So these have been brought together and merged, and it's been almost universally condemned by the charity sector. There are issues around the priorities of the FCO, which is more aligned to political stability rather than necessarily humanitarian aid. And again, the Prime Minister has said that foreign aid going forward needs to be aligned more to the country's needs. And this concerns quite a few charities for a number of reasons. So during the mid-2010s, DFID came under a lot of scrutiny because a lot of the foreign aid was going to organisations like the Adam Smith Institute, for instance, which is a free market think tank, and some of that aid was being used for projects such as privatising Nigeria's energy industry. So whilst it had political implications, the ramifications for that for the individual people living in Nigeria is that their energy costs went up considerably after the privatisation. So the likelihood is that there's going to see more of that sort of thing. So less of a focus on humanitarian aid and more around the political aid, and potentially going to see a return to tide aid, where we'll give donations on the condition that it's spent on UK companies, that sort of thing. COVID-19, we can't not mention it. I've kind of touched on it already. I'll just pull off some statistics really to give you an idea of how much of an impact this has had on the charities market. It has caused some real problems, again exacerbating the issues that we've been discussing already. 10% are looking at permanent closure at the moment. About 40%, I believe, have said that potentially if things don't improve, they'll be looking at closing over the next year to 2 years. To 2 years. They are able to actually find solutions. A lot of charities now are diversifying their activities, using existing skills in a new format. Joe, I think was this another one you had a good example you were able to throw in?
Yeah, so there's a kind of arts and music charity, kind of an arts promoting charity, let's say, and that they actually, as a new kind of fundraising and revenue stream, went into partnership with an app for musicians that facilitates kind of creative thinking and creative meditations and helps you promote your music. And they were then kind of almost reselling this, heavily subsidised to people who were needing it as a revenue stream. It threw up lots of interesting questions about kind of supplying arrangements, and if the app were to go into the company that makes the app were to go into liquidation when they bought the licenses in advance, what implication that would have on the insured entity, and then also kind of how they store user data. And there were the insurance implications and risk management implications around that, but it was a very exciting new kind of venture for them to adapt to these new circumstances. And from what we can see, it's incredibly popular, and that's something that they've floated. So it's quite an interesting thing, yeah.
Yeah, so I know recently I was referred to one which was actually a soft play centre. Obviously, they had to close when COVID kicked in. So a lot of the staff who worked there were so used to actually cleaning up the soft play centre that they diversified and now offer contract cleaning services as a way of actually just bringing funding in to keep them going over the next few months whilst we're going in and out of lockdown. So, I mean, certainly from an insurance point of view and certainly from a broker's point of view, it's all about making sure that you're getting all the right information you need on these new services, and they're not suddenly deciding that they're actually going to move their free Silver Surfers IT club on a Thursday into offering a full paid for IT consultancy service without making sure that's picking up all the PI implications from it. But a lot of them are diversifying. They're finding new ways of actually finding funding, so they are continuing to survive. And again, the government has offered this support package. So I believe all of it has been allocated out of the 750 million, and the vast majority of it has actually now gone to the individual organisations it was meant to go to. And there are potentially further measures in the offing. Certainly, again, from an insurance point of view, I think we're going to see some changes from the industry. You're already starting to see insurers tighten up the wordings to make sure that there's not actually going to be any potential COVID or future pandemic risks going on. And we are now starting to see the first signs that rates are hardening. Certainly, as reinsurers are starting to put up their prices, that cost is going to start to flow through down to our individual policyholders, unfortunately. So we'll talk about some of the issues that they've had over over historic things. We're going to try to do a little bit of future gazing to sort of see potentially what is going to come up. It's quite difficult, simply because of the uncertainty around COVID and other sort of societal shifts. So it's going to make future gazing quite difficult. But there are some sort of early indicators and some emerging trends which we can have a quick look at. Funding is obviously going to be the biggest issue. The government have said that it will continue, but it's likely to be at a much lower level. So as Joe mentioned, a lot of charities now are actually really starting to diversify in terms of their activities. The likelihood is, though, that there will be casualties. We're seeing about 1,000 charities basically close their doors permanently in the first 6 months of this year. And we mentioned in some of the statistics that they're already using the reserves, the ones that are still going. So I would expect to see as many, if not more, in the second half of this year. So I was going to be around controlling that expenses line. I think what will happen will vary on the organisation size and what we're actually doing. So a lot of the organisations that are in the super giant category have enough assets to actually keep them going for several years. So I think broadly they will tighten up their assets. There'll probably be less money going out in terms of grants to other organisations. But there are a few signs. A couple of the CEOs, so the CEO of Oxfam was basically saying that he's concerned around how these large organisations have monopolised the charity market really in terms of funding. So they certainly as an organisation are going to try and get more money out to those smaller organisations to help keep them going as well during this difficult time. Mid-sized organisations, I think, are going to be the ones who are going to be the most hard hit because they are going to be tied into contractual obligations for providing services, and they're also most likely to be the ones who've got paid employees, so there'll be additional costs to actually try and get rid of those in terms of redundancy settlements. So I would certainly expect to see more closures on that mid-sized organisations or mergers of organisations where they've got similar goals and they operate in a similar geographic area. So that's probably going to see where we're coming through on that side. Potentially on the commercialisation of services, there will be activities coming out of public sector into potentially the charity sector as well. And these sort of guys are going to be the ones that we pick up the actual delivery of those services. Small and micro ones, at the moment we're seeing closures primarily from the small organisations that haven't got the assets to actually operate. Where I think we will see the survivors are going to be those real micro organisations, the community groups who can operate on a shoestring budget and are not quite so beholden to funding as some of the bigger groups are. And so the model of the group will really depend on it, but potentially that's going to be an area for growth going forwards, is the micro organisations. Government level, we're going to see some changes. Certainly the PM has already said that the recovery is going to come from the private sector. So there's going to be some outsourcing of public services. Some of that may go into the charity and social enterprise sector. Some of it will go to the private sector likely. There are concerns around this at the moment. Certainly when COVID first came out and the government introduced the emergency measures that removed all the need for tenders in terms of contracts and in fact a lot of the scrutiny as well. So there's been quite a few high profile cases where multi-million pound contracts have been dished out to new organisations that haven't necessarily got any past history of supplying PPE to the NHS, but it just so happens that someone has got a connection somewhere. So there's a lot of organisations that will be fighting for those contracts, and there's going to be a lot of scrutiny about where those actually go. There's an organisation called the Good Law Project, which is currently suing the government to try and get more of an idea about where this money is actually going. Charities having to be transparent and open possibly might be excluded from future things, simply because they're not necessarily wanting to say exactly how money is being spent. Another emerging issue, again, is around the ideological conflict. Charities now being brought into some of the ideological and political disputes that are going on. A good example is Mail on Sunday. The Times did a couple of stories regarding the RNLI, so the Lifeboat Institute. So that was at the end of last year. So here's a couple of the headlines that they actually ran. So the RNLI funding bikinis for Africans whilst cutting jobs. RNLI had to respond to this to sort of explain that about 2% of their total budget goes to overseas drowning projects to prevent drowning in foreign countries. And part of the cost of that are to buy swimming costumes for people in Tanzania that can't necessarily buy it themselves. You can see from the language that's actually been used. This is, part of an ideological goal and an ideological language that's been used. We're also seeing charities being targets of fake news. So the CEO of ActionAid became the subject of a story accusing them of having contacts with ISIS and terrorist organisations. It originated from a right-wing group, was prompted by them having concerns about Donald Trump and his foreign policies. But there's quite a few organisations now that are being targeted. This is a particularly good one. This is Oliver Taylor. So he's a journalist who wrote an article about a UK-based charity called War on Want, which is a pro-Palestinian human rights group, alleging again that they had connections to terrorism. So the Daily Telegraph and a few other media picked it up. It resulted in PayPal freezing their accounts and a full Charity Commission investigation. The Charity Commission investigation found basically there were no charges to answer simply because Oliver Taylor does not exist. The photograph that you're looking in front of you was entirely computer generated. The CV that he submitted with the articles included his credentials and qualifications. None of the colleges and universities recognised him and had anything on it. It was an entirely fake story and entirely fake journalist. So it just gives you an idea about how far people are actually going now in order to actually target organisations that work in this sort of area. And again, when we're sort of getting political language coming from ministers regarding lefty activist lawyers that kind of that are hamstringing the political system, the legal system, this really does undermine the work of a lot of our organisations that work with immigration rights and human rights going forward. So I'm touching on a couple of growth areas. This is where we think possibly we're going to see new charities emerging and growth of the sector. So tackling poverty and inequality, certainly at a local level. A lot of the charities that came up around COVID were involved with helping the most vulnerable in the local area. That's likely to actually continue as people become more aware of the issues that are actually there. Protecting the NHS and care services. People clapped for the NHS and are actually now more concerned about the future of the NHS and social care services. Especially the changes that are going to come through with that. Overseas humanitarian aid, again with the money moving from humanitarian aid to more a political slant, there's potentially going to be a gap there for charities to step in more with humanitarian services. Protecting democracy, again we're looking at losing checks and balances, Supreme Court's losing control, human rights, potentially we're going to have issues around those with determining what exactly is and isn't a human right anymore. And again, I suppose an increased focus on environmental issues, the Greta Thunberg effect, that's not actually going to go away anytime soon. I mentioned a couple of the long-term changes. These are the ones you'll generally see around technology, but they impact the charity sector just as much. There's potentially ideas for using drones to actually deliver medicines to remote areas in Africa, or deliver emergency first aid services to remote areas. I don't know if people saw that there's a clip that was a paramedic in a jetpack testing out whether they can actually get rescue services up onto mountains in the Pennines somewhere, I think so. And again, things like AI machine learning. So you can already now download apps for counselling services, effectively, where it's an artificial intelligence at the other end that will just have a conversation with you. So these sort of areas that affect general society also have an impact on the charity sector. So our final poll, the future of the sector. Is your brokerage looking at the charity and faith sectors as an area of growth in the coming years? A couple more seconds on this one. I do appreciate that. About a third of you already said that you had about 50 or so charity clients, so we recognise that quite a few of you do actually specialise in this area anyway. And results are yes, 14%. If you're unsure, then hopefully what we're talking about today will actually give you a bit more encouragement that this is potentially a growing sector. It has its own unique intricacies and quirks, I suppose, but it's a very vibrant sector, and it is worth looking into. So I'm kind of want to come on the final part. Really, it's talking about action from the industry. I think it's all about being attentive to the sector. There's so many changes going on at the moment. From an insurer's point of view, we need to be aware that the needs of our market are changing very quickly. And we need to have the agility to actually be able to adapt our policy wordings, adapt our coverage to be able to meet those, to meet the needs. There needs to be acceptance in markets hardening. At the same time, funding is tighter than it ever has been, really. So actually, insurers taking a more sympathetic view in terms of how we rate our policies, whether there are other financial support measures that we can actually give to our charity clients to make sure that they actually can continue to run. And I think overall, it's just a general acceptance that COVID-19 has completely shaken up the sector. We don't really know where this is going to go. We don't know how long it's going to be with us. And the other political and societal changes which are coming through are only going to exacerbate it probably even more so. I'd like to thank you all for joining. We're going to go for a Q&A session. I see that quite a few people have actually put something through. If we don't get to answer all the questions now, I do apologise. What we'll try and do is either record a separate Q&A session, which we'll put out on there, or we'll send something out as email notes alongside when we actually put this webinar up online.
Thanks, Simon. Yeah, we'll send a link out for everybody that's participated where you can watch it again, and any answers that we didn't get round to. So that'll be following in due course. So to crack on with the questions, guys. First one from Emily Mort. Are you able to write business in the heritage rail sector, including the specialisms required, such as engineering covers? Most of the heritage rail sector in the UK runs as charitable organisations and rely on volunteer staff, but there are clearly specialist coverages required.
I The short answer is yes, but it will depend on the individual intricacies of what they're actually doing. So they do vary in terms of what they're actually doing. We've got some smaller clients that are, they've been gifted an old locomotive which the volunteers are actually doing up in their spare time. I think where they're actually going onto public railways, that's where we probably would start to stray away from that. We do have some railway museums that do have operational locomotives, so we can cover them whilst they're stationary. We don't really want to be covering them when they're actually in motion as a transport risk, effectively. But short answer is it really depends on the individual risk, but we do have some, so we can do to some degree.
Excellent, thanks, Simon. Do you find that your backing insurers have a good enough appetite for charities which operate in areas which are at risk of the woke element of society, or would they just walk away from a risk just to appease that element as opposed to embracing real diversity?
I guess this comes down to what it actually is. I mean, there are certainly areas that our insurers will probably want to steer away from. I think so when we're getting political extremism, that's probably not something they'd want to be attached to. I know our insurers generally don't want to be attached to things like fox hunting and that sort of thing. So, but for the most part, I think provided they recognise that the activities of organisations are for benefit, they're generally very supportive. So an example might be get circles of support, which are effectively like an AA counselling session for sexual offenders. So whilst insurers might go, oh no, there's a massive abuse risk there because there are sexual offenders involved, insurers we're dealing with are actually saying, well, these organisations are important to helping reduce the occurrences of sexual offence, so we should actually be supporting them as much as possible. So it's not necessarily whether it's controversial that could be the issue, it's potentially whether it's going to be harmful to actually be associated with it. So again, it really does vary on the individual circumstances, but they're not that scared of actually approaching things which are potentially a bit controversial.
Okay, thanks, Simon. Next one here from Alan. Owing to the trying times of COVID-19, there are a lot of entities that are suffering from using their premises. Would Acumen consider being flexible with unoccupancy?
Yeah, so certainly the insurers that we deal with, certainly when COVID first came out, we immediately said we were going to waive the unoccupancy conditions for the time being. We allowed any items that were insured as contents to be taken home with no conditions, no additional premium to that. So we are absolutely trying to be as flexible as we possibly can. In terms of unoccupancy going forwards, the response from Aviva was that they would waive it up until a certain point, which sort of ended around September. But if there are organisations that haven't gone back, we can review those on a case-by-case basis. Obviously, now we need a wider view in terms of where we're getting regional lockdowns. So we're just waiting for Aviva to actually confirm on that. Brit's stance was basically that if the government say you can't operate, then we're not going to apply on occupancy conditions. It's unfair to penalise people and saying you're not using your building if the government states that you're not allowed to use your building.
Okay, great. This one's from Valentine. Are you aware of any abuse claims where it wasn't worded in the policy wording and the outcome?
Not with Acumen, no. We've had one alleged abuse claim which was fairly quickly dismissed. I've really only seen abuse claims more with previous companies I've worked for. So Zero Admissible obviously did a lot of public sector work, so social workers, care homes, that sort of thing. So they had a lot of claims. Ecclesiastical and Nansvar again had a lot of schools and carers, but a lot of them tend to be historic. So I would say from an Acumen point of view, I can't really add anything to that, I'm afraid.
Okay, thanks, Simon. Does the Acumen policy provide cover for a data breach liability claim under PL?
Yes, so all the policies do cover the third-party element. So it's if a claim comes from a third party, so the data subjects effectively who've lost it. So generally across the market now, they tend to be sublimit to £1 million, which for the vast majority of our customers is more than adequate. And again, we've got things like our cyber recovery service that not only will pay for your data to be reinstated, but will actually cover the third-party claims and other expenses like inform the regulators, doing all the credit monitoring for affected data subjects. So there is limited cover under the PL, but there's additional cover if you also bring in the cyber section as well.
Excellent, thank you very much. Right, can you share examples of online abuse risk and under what circumstances Have you had any claims in this area? And that's from Ravi.
I think basically you just need to open a newspaper and you'll see multiple examples of online abuse. So grooming occurs online for the most part, before it actually then progresses into sort of physical abuse. In terms of claims, again, as I mentioned with Acumen, we haven't had any claims. In terms of other insurers I worked at, I have seen claims where employees have been dismissed after allegations of abuse have been levelled against them, where they were effectively offering online counselling services to young people. And I think one of the employees was alleged to have gotten a little too friendly with one of the young girls that he was supposedly counselling, and was dismissed from his post. So it was a combination of allegations from the family of the young girl in question, and allegations from the dismissed employee against the insured for dismissing him. So it's a slightly complex procedure, but online abuse occurs quite a lot.
Yeah, okay, thank you. Right, so we've got a couple of questions here relating to cyber, which I'll bundle together. First one from Richard is, do your policies include cyber section? And then another one here from Nuz, how can we include cybersecurity cover within a charity faith quote? Okay,
so both of our policies include a cyber section. It's actually written with Loriga, who specialise in that area. They're an MJ, so the money behind it's Hiscox, but it's a pretty wide and comprehensive cyber recovery policy. So it picks up all the initial response bits of what to do in your first steps, and they will come in, they will remove any viruses or ransomware that are there, they will reinstate your data, it'll pick up third-party claims that come against the organisation, it picks up notifying the regulator, it picks up notifying the data subject. So it's pretty broad. It's not a full cyber policy, so it won't necessarily cover things like your loss of data, or if you've been defrauded and money's been stolen from accounts. But as I say, I think the premium starts from about £71, is it, Joe?
Yeah.
So about £71. So it's really targeted at our lower end scale, and it can give up to £250,000 worth of cover, which again, if you're talking about the average breach costing £10,000, it's quite often more than adequate to actually cover most things that you'll actually see.
Excellent. Okay. This one's from Barry. Do we have dedicated adjusters?
Well, Acumen itself doesn't have any claims handling authority. Being an MJ, we just look at the underwriting side, but the insurers that we deal with do have loss adjusters who do a lot of charity business. So as most of you will be quite aware, Aviva have their own charity propositions with scheme holders, and they've got their own direct propositions as well. So they do have adjusters who specialise in these areas.
Okay.
It's also worth mentioning that our policy does have the loss recovery service as well. So we have, as well as the cyber, we've got the physical property loss recovery. So if you have a material damage or BI loss, which is over £5,000, we can appoint a loss adjuster who then works on behalf of the client. And so they will go in, help prepare all the inventories, advise the client. And effectively, it's just a hand-holding process from the client's point of view in terms of what they actually need to do. And it just speeds up the claim. It makes it a lot easier because the loss adjusters know the language of the insurers' appointed assessors as well.
Okay. Excellent. Thank you. Okay, from Simon, how are you competing for Anglican churches currently?
Anglican churches are always a difficult one, simply because the vast majority are already insured with ecclesiastical. They are all separate organisations, so they're free to place their business wherever they actually want. But the Anglican Church is so tied into ecclesiastical. Ecclesiastical is owned by the All Churches Trust, which is owned by the Anglican Church. So they kind of see it's putting money back into the pot. So it is a very difficult market to actually get into. So we do have a few, but they tend to be ones who have decided to just break away from the fold and try another insurer, and I found that they've got it much cheaper. So I think ecclesiastical have their specialisms, and there are certain parts of their policy wording and the service that they can provide in terms of things like surveys that are very good, but there are other areas where they don't do so well on. So depending on what the priorities are for the individual churches will depend on where they actually want to place the business, but it is a tough market to do.
Thanks, Simon. Okay, do we have a panel for the LEX, because it's legal expenses, or is it one provider?
We have two providers at the moment. So on the Aviva policy, we tend to use DAS. On the Brit policy, we tend to use ARAG. We can offer some of those potentially in standalone. So if you have an Aviva policy but specifically want to use ARAG for the legal expenses, we can set up an arrangement for that. They need to run as 2 separate policies at the moment due to IT restrictions, but we're looking to change that for our new wording that's coming out hopefully in the next month or so. So we're actually massively updating our wording. We've got a lot of new sections going in, new extensions that will just really bring it back up to date again. So yeah, so DAS and ARAG are our 2 legal expenses providers.
Okay, brilliant. That question was from Barry, and we've got another one from Barry here. What is the max limit for TI?
10 million.
We can do 10. You kind of want to question why they want 10 million. So if you look at the purchasing of insurance, it tends to be that the big global organisations that are buying £10 million of insurance. I have seen charities with an income of £8,000. You know, they want 10 million PL, 10 million EL, 10 million PI, and 10 million TI. It's entirely inappropriate for the sort of levels of cover they're actually buying. So I've been writing TI for 20 odd years, and I've seen one claim go over 2 million. So TI is an incredibly high limit for a charity organisation, but we can do that much. We tend to sort of look at the sort of 1 to 5 million limit.
Okay, those just have an organisation here. Let me just close that down. They have 30 trustees, hence the limit.
Number of trustees doesn't really have that much impact. It's going to be the size of the organisation in terms of the pricing, and potentially what the size of the loss could be. So some of the biggest organisations can be quite straightforward from a TI point of view, because all they do is sit on a pile of money and hand out the dividends each year to various other organisations. Some of the smaller ones can be very active, making lots of decisions on a daily basis, and a much higher risk from a TI perspective.
Unless one of those trustees was actually based overseas, we wouldn't take that into account in any pricing at all.
Okay, fantastic. Thanks for the engagement, Barry. Okay, next one's from Emily. Abuse is a key section of public liability cover when placing charity faith organisations, but we find it difficult to find management liability TI cover without an abuse exclusion. Why is this?
I guess it's probably because TI is generally cheaper, and effectively you want to be quite clear on where cover should sit. So certainly at one point in time, most TI policies used to have a failure to insure exclusion on there, because people kind of worked out that why spend £10,000 on insuring your enormous building when you can just buy a £1,000 TI policy, and if it burns to the ground, you can just say, well, I've failed in my duties as trustee to make sure there's insurance in place, and please pick it up under my TI policy instead. So I think it's just trying to get clarity in terms of where claims should actually sit. I don't think we have an abuse exclusion on that. We'll double check our wording.
Thanks, Simon. Okay, guys, so we're coming up to 12 o'clock now, so we're running out of time. We're going to continue with the questions, but if you need to get off, we will be supplying a link with the with a copy of the presentation, but also the answers to your questions. So if you need to go now, that will be available to you. Next question is from Anonymous. Do or would Acumen offer long-term policies, i.e. 2-year or 3-year policies? What sort of benefits are there with that? How can we guarantee clients the premium wouldn't increase significantly if NTAs are needed throughout that long period of time?
Currently we're offering 3-year LTAs. The market is going to change a little bit around that, I think. Certainly we've heard more talk about other insurers declining to offer LTAs going forward, or only offering LTAs on policies over a certain size. So at the moment we can still offer it, but again, I think one of the difficulties is that everything's changing so quickly. Reinsurers' appetites are changing, insurers' appetites are changing. So whilst we are entering into these LTAs with all assurances that we'll be able to maintain rates, we just don't know what's going to be going around the corner. And potentially there is the risk that insurers will say, I'm afraid we actually need to do break LTAs on this occasion because of reinsurer requirements and so on. Is that your similar sort of view, Joe? Yeah,
continuing to offer them, continue to be in demand. I mean, was part of the question if there was a lot of midterm adjustments, how, that that would only affect things, proportionate and proportionate to the risk at first renewal, but the LTA discounting and all the other rates would be maintained throughout the whole period of the LTA, which ours, of course, is 3 years. What was part of the question about MTAs throughout midterm?
Yeah, MTAs are needed throughout that long period of time, increase significantly.
Right. Yeah. So it's basically if you've got an organisation and midway through they buy new property and all of a sudden we add on a load of extra exclusions. I'm guessing that's sort of the question there. Potentially you might have scenarios where adding on a building would require us to add conditions to that building, but we wouldn't be looking to add new conditions to something that already exists if it's not relevant to the change in exposure from the MTA, if that makes sense.
Yeah.
Excellent. Okay, from Simon, what happened to your wordings in the FCA case?
Our wordings were completely out of scope, so they weren't actually checked. We were quite clear that we had specified disease exclusion, so we were only actually giving cover for those listed diseases, of which COVID was obviously not one of them. So we were out of scope anyway. We did have a handful of claims, because obviously not having claims handling authority, we did say to our clients that if you do believe you have a case, please do put it to the insurers directly. But I think that they were sort of fairly limited. It'll be interesting to see how some of the other markets come out. So I know ecclesiastical were reviewed, and FCA decided that their wording was fine and didn't put them in scope. But I know Markel and, I believe it's Markel and Hiscox and a few of the others were potentially on the hook for it. So we'll wait to see how that pans out with them.
Great, excellent. Another question from Emily here. Is there a possibility of a pool coverage similar to terrorism coverage that could come into play for companies hardest hit by pandemics, including the charity and faith sectors?
It's entirely possible. So we had pool re for terrorism, flood re for flood risks. If the market puts pressure on, then potentially there is scope for a COVID re or pan re, I don't know. Who knows, potentially yes.
Excellent, thank you. Okay, question from Tracy. One of the main responses we get from a not-for-profit organisation, why they don't need TI cover, as they have limited liability, and this is why they're not worried.
Right, this is one of the most common objections to bank trustees indemnity. So when you become a limited company, it gives you two protections. Number one is that if you wind up with debts, it's the company that owes the debts rather than the individual trustees. And the second one is that if you enter into a contract, the likelihood is it'll be the limited company that will be named on the contract rather than the individual trustees in the case of an unincorporated association. With the exception of those two, really you haven't got that many more protections. So all the sort of breach of trust, breach of authority, if you're breaching your memorandum and articles, all the sort of claims, libel, slander, where we've got claims for discrimination, harassment, all those will equally still apply. There's a chap called Pesh Framji, who's quite well known in sort of charity markets, and he wrote an article probably about 15, 16 years ago discussing that exact thing. So it's a misconception that's been going on for a very long time, but limited by guarantee does not protect you for most of the claims that you actually see.
Okay, excellent. Another question from Simon here. Do you really think the charity sector will see widespread market hardening of rates?
I think it'll see it, but less so much on than the commercial side. I'll say. Unfortunately, we do quite often get lumped into general SME accounts. So when they're actually looking at the overall performance, the fact that charities generally have a much lower claims ratio than commercial organisations doesn't always get taken into account. But again, we're looking at sort of some global insurers, and again, the reinsurance costs are going up. So where reinsurers have had losses from COVID being global reinsurers, that those costs do move their way down the chain, unfortunately. So I think we will see market hardening, but maybe not as much as they will see in the private sector.
Okay, excellent. From Ravi, will your cyber section response to losses incurred due to fake news? I imagine funding could be impacted as well as reputational damage.
Fake news, no. certainly not on the cyber side. You can get cyber policies that will give that sort of cover. What we do have on our ag legal expenses policy is a reputational damage cover. So again, this is one where it doesn't actually require there to be an actual loss. There just needs to be media reports out there that are damaging to reputation. So that gives a degree of cover to actually start rebuilding that. And that applies to individual trustees as well. So in the case of ActionAid, where it was the CEO who was specifically targeted for that, that just gives him or her an amount of money to actually start to build a PR response to the fake news that's actually coming out. So on the cyber side, no, but it is there in legal expenses.
Excellent. Okay, from Christina, can I get some information on your stance on Brexit and charities with ROL ties? ROA ties.
We probably don't have a stance at this moment, simply because we don't know exactly what the outcome is going to be at the moment. It's quite difficult. Joe, I don't know if you've heard anything separately coming from our insurers on that.
I mean, we have, a significant amount of charities with ROI ties. If you mean specifically, I mean, it's something that I've dealt with a couple of times or several times where employees are ROI domiciled and they're ROI citizens and therefore EU citizens, and whether or not we would extend EL to them and can do is a part of the wording that is something that's highlighted for development, and that how that's going to change going forward, I'm not sure. I'm sure under kind of EL and PL sections, when it comes to people who are UK domiciled working in Europe or wanting to work in Europe, and whether or not we'd extend cover, I'm sure not much will change in that area. But I don't know how you feel, Simon.
We don't know necessarily. I mean, we're not looking to insure organisations that are registered in the EU as companies in ROI. So we are looking at companies or organisations registered in Northern Ireland who might have some operations in the Republic of Ireland. But again, there's going to be sort of implications around right to work and whether you actually need to get visas to go overseas, and that we might need to build in the wording. So at the moment, we just don't know enough how Brexit's going to land to actually make any changes in terms of the insurance coverage.
Okay, brilliant. This one's from Ravi. Are you seeing the impact of increased reinsurance costs now? And when do you think your rates will go up?
We are currently negotiating with insurers where they have requested rate increases. So yes, we have been asked. At the moment, we are negotiating whether those are feasible and possible, is the short answer.
Okay. From Fiona, how about local lockdowns, perhaps regarding unoccupancy, that question?
As mentioned, so we can review those on a case-by-case basis with Aviva. I'm waiting for something more generalised. So say, if they're going into local lockdown, then again we can waive the unoccupancy conditions. Just waiting for confirmation on that. Again, Brit's stance is if the government have told you you cannot open, then they're not going to apply unoccupancy conditions.
Okay. Great. All right, guys. Look, there is a few more questions on there, but I'm conscious we're 10 minutes over, so I think we'll wrap this up now, and we'll get the other answers out to you on the follow-up. Thank you very much to Simon and Joe. It's really informative. We had over 150 guests on it, so it's a great turnout. And thank you for getting involved in the polls as well. It's really interesting for us to see how you guys are finding things. Any questions, we're here afterwards. Please reach out. We encourage that. And thanks for your time today. Cheers, guys.
Thank you very much for joining.
Thanks, guys.
Thank you.
Bye.